Hi, this is Jack from Alpha Charts 365 with the State of the Market update. Today is January 11th, 2020. Before we get started, this is not a recommendation to buy, sell, or hold any stock or security. This is for informational purposes only. And I may hold positions in some of the stocks mentioned. Okay, so we're going to start here with the SPX. And again, a beautiful uptrend. Everything looks great. The one concern, and we mentioned this now 2 weeks in a row now, is how far we're getting away from these moving averages. It's about 7% or so from here. And you can see prior dips have been, looking here, that was only 5.4%. Even here, we're looking at this peak that's 4.88%. So we're extended. It is what it is. Now, are we going to crash? No, we're not going to crash. I don't think so. Anything could happen. But likely this is going to kind of either consolidate through time or price, and then we'll continue the uptrend. Nice, good bull markets. We'll see 15% corrections, 20%, pullbacks. 10%, who knows? We don't know the amount, but we have to expect that this trajectory probably won't go on forever. And there's going to be some either chop or pullback and then continue higher. So just, word of caution, know your time frame, know your risk. Is it going to happen on Monday? We don't know. Is it going to happen, 3 weeks from now? Maybe. We don't know. But it is getting a little bit extended here. Going to the Qs, same story, getting extended. But again, the uptrend's intact, so we would expect whatever we see, whatever shakeout or sideways consolidation we see, should just be short-lived, and the expectation would be that this continues higher. Moving on to the small caps, not as pretty as the other two, as the SPX or the QQQ. We're now here. We're testing the 23-day EMA. Again, it could bounce and go higher. Maybe. It could retest the initial breakout around 159, 160. That would be totally normal price action. The uptrend would still be intact, right? Longer term. Again, it all depends on your time frame. Looking at Dow Jones. Nice. Uptrend. Again, it may try to retest, this 90-50 area. Again, uptrend would be intact though. So nothing to worry about there. But looking at just how far it is from its, come on, stop that. Let's try that one more time. Yeah, so it's 4.7, not quite as extended as the other indices. But still, extended. Can I continue higher for a little while longer? Yeah, possible. So just something to take notice of. Let's look at some major sectors. All right, XLF, right? Again, we talked about this area being important, still important. Go back to a daily. And you'll see, what do we expect? Either sideways, which is what it's doing currently, right? Just moving sideways right here at that important level, or maybe even a small pullback, right? That would be fine. And then the breakout. Uptrend looks pretty strong. A few distribution-looking candles coming on in here. But I don't think it's anything to be too concerned about yet. Uptrend's intact. It looks pretty good. I still expect this to either go sideways, pull back, maybe hit this 65-day EMA, and then bounce higher. So that looks okay. Looking at semiconductors, they have just ripped higher. We are just, go. Looking at 12% extended from the 150-day EMA. So it's extended. Can we, and listen, semiconductors shake out every so often. So yeah, this looks like it's going to shake out at some point, right? And probably come back to this area and then probably continue higher. Lumber is just kind of consolidating right at this important area. Nothing to be concerned about yet. Has not broken down or anything like that. Most of the longer term moving averages are still rising. The shorter one is kind of flat. So wood lumber looks pretty good. Okay, so the equity only put call ratio. Just going to clean it up with a line chart. Okay, so obviously these are extreme measures in my opinion right here, and we keep coming into this extreme area, which means that there's a lot of bullishness going on in the market right now. So we could be up here for a while, right? It doesn't mean that just because we're up in this area, it's going to crash or correct or anything tomorrow. It can stay up here for a while. So this isn't a reason to sell everything, in my opinion, but it is something to take notice of, because eventually this is going to have to have to be a shakeout of excessive bullishness, right? There's going to have to be some kind of bearish scenario out there that's going to cause this to kind of get back into this at least middle range for this bull market to continue higher. Going forward to S&P versus the TLT. Looking at that, again, it seems like people are favoring risk assets over safety assets. That's the way I look at this chart. So that's not much more to say there. The VIX, again, it's low in a bullish range. For me, I think 16.5 is where I go from a bullish range to maybe a more volatile range. So we're still in a very nice bullish range. Nothing to see there. S&P versus the rest of the world minus the S&P is breaking out. So it still says the United States is the place to be versus the entire world, not including the S&P. So again, it looks like we're continuing higher. So S&P is definitely one of the, if not the best place in the world to be right now. Last one I'm going to look at here is the value line geometric index, and that is again hitting this intermediary important area. It's kind of found that kind of like XLF, kind of consolidating nice and through time here. It may pull back to that 65-day EMA, and then it could bust out. It's a measure of breadth, I think, and I think that breadth is very healthy right now, and this is a healthy price action as we see it. So a couple of ratio charts I want to pull up. First one is the XLE versus the SPX. So going back and move to a weekly. So relative to the S&P, we are now at basically 20-year lows, right? 20-year lows versus S&P. And again, this is the absolute low in 99. What does this mean? Well, it doesn't really mean anything right now. But if I start to see this start to chop around back here, hold this, I may, XLE energy type stocks may start to be outperforming the SPX. Again, nothing to see here, but it's an interesting area where support may be found relative to the SPX, and then outperformance potentially could happen. And again, it may be a play on the dollar. The dollar is showing weakness here. So again, energy is dependent. A weaker dollar will help energy stocks in general. Maybe, but it's just an interesting relative place that the XLE is. Another interesting thing is financials. So relative to the SPX, we were seeing this nice bottoming and outperformance, and then boom, it just fell off a cliff. So XLF is no longer relatively strong. Doesn't mean that financials may not continue to go higher, but compared to the overall market, it's been underperforming, since mid-December or so. So I think that's something to take note of. It's below all of its moving averages now, and they're starting to all turn lower. So financials may not be the place to be going forward. All right, and I can tell you that technology is the place to be according to the charts relative to the SPX. I mean, it is all-time highs, right? Relative basis, all-time highs. Unbelievable. Let's change that to even to a monthly chart. Let's just look at, well, not all-time highs then, I guess, right? I guess 99, 2000 was all-time highs. But, it's been a while since it's been this high, and the outperformance is apparent. All right, moving on. Okay, so we said that the U.S. is the best place to be in the entire world. And so, but there is one notable exception to that. And the notable exception is China. So looking XPX versus China, right? And we see that right now, China is starting to outperform the SPX. So we see that it broke the downtrend line. We see the moving averages. The shorter terms are already going higher. The longer term is starting to make that curve higher. So China is a place of interest, in my opinion. And looking at China in general, and now drilling down to the internet, China internet stocks, the K-Webs, so it's outperforming China overall. And actually, I probably should start with the CQQQ. That also. So China Tech is really, really, really outperforming not only the SPX, China's outperforming the SPX, but China Tech is also outperforming general China overall. So I think that is a place to focus on. Right now, really, it's U.S. technology and China technology. Those are the themes where I think that we need to be. And I think I'll do another video tomorrow looking for setups within these two. Because even the China tech, I mean, if you look at Queb, K-Web, whatever, it's run pretty far. So, I don't know if this is the right place to start a new position, potentially, but there may be within it, again, that's the CQQQ. Again, it's run so far. Again, it may not be the perfect spot to start a position, but it's also there may be possibilities and things that we can start to make watch lists out of. All right, so I think that's it for the day. I hope you guys got something out of this, and gals. And again, any questions or comments, go ahead and leave them below, or you could find me on Twitter also. Good luck this week trading.